if that's a game that we're never going to win in terms of actually delivering an outcome, which is housing people can afford to live in, what's another way we can do it? And so we've done it through innovation. We've done it through investing, most recently into a manufacturing company that is building stackable steel constructed housing units in a factory that we can build those units on a unit by unit basis at a much lower cost, and therefore be into the project at a much lower cost, and therefore deliver a rent that's actually attainable by a working American.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 365. We are facing a real dilemma in this country with our lack of attainable housing. And it's easy to understand a lot of the supply and demand reasons why this crisis exists in the first place. But identifying solutions can be challenging. My guest today is Chris Loeffler, the CEO of Caliber, an Arizona-based real estate investment firm and alternative asset manager who is working to provide answers now. We're going to discuss how to confront skyrocketing costs and the lack of attainable housing in areas where the market is red hot. And this conversation will cover the gamut from land leases and flex manufacturing, master plan communities, and the home as a service model. We'll be explaining what all those mean. Chris, welcome to the show.
Thanks, Brian. Great to be here. Hope we have a great conversation.
Tell us a little bit about yourself and what you are trying to achieve through Caliber.
So I'm the co-founder and CEO of Caliber. We started in late 2008, right at the height of the Great Recession, or the great, 2008 financial crash, and built the company through the 5 years that followed that. So I know exactly what it's like to go through a market change, and I feel like we're in one right now. In terms of what Caliber does and how we're different is we're very focused on an end state of building generational wealth for our clients, our team, and the communities that we invest in. And we do that through real estate by raising interesting forms of capital into different types of funds, investing in projects, and then acting as a developer, oftentimes a master developer, as well as a construction manager, seeing the projects all the way through to completion and actually holding them for the long term, as well as providing certain interesting exit strategies for our clients. And so we created a place where an investor could come build trust once and invest with us for, decade after decade, and hopefully generation after generation.
When we talk about attainable housing, which is something I mentioned in the intro, that's very different from affordable housing. What do you mean by attainable housing, and how are you addressing that?
A lot of people categorize housing in certain ways. Attainable sometimes is, anybody who could afford to live there that's within 120% of the area median income. So it's not a technical designation like affordable housing with certain tax-related structures around the housing, but I think a better way to think about it is it's a place where the average human being could afford to live in a time when affordability is in question and has been for a long time. And it's finding ways to build, in my mind, much more effectively and efficiently to deliver that unit and that square footage that person needs at a price that they can afford.
What are the challenges as a developer and construction management company and all that, building these types of communities? What are the challenges you're facing in actually achieving attainable housing that the average person can afford to live in?
The primary challenge is that real estate is not, everyone thinks it's sticks and bricks, but it starts out as a structured finance business. And then it becomes sticks and bricks when the fun part starts. And so the structured finance component of this is there is a huge, demand, or at least there has been in many cities, for land. And so land values are up. There is a lack of supply of building materials. There's been a lack of supply of labor. And although I think some of those things will change in the near future, and they are changing, it creates a circumstance where if the land's expensive, the materials are expensive, the labor is expensive, the thing that you can build is Class A multifamily or, beautiful Class A properties, which hit a certain band of people who can afford those. But the rest of us are left on the sidelines, unable to afford those properties because of the cost of construction. And so how do you get past it? If cost is the issue, there's really two ways to do it. One, you subsidize. And that's been the strategy for a very long time. There's all kinds of acronyms I can name off between low-income housing tax credits and all kinds of other things to try to subsidize the cost and therefore cut the basis and therefore create affordability in the unit. Functionally, I think that is as good as all those programs can be, and they can be successful on a one-by-one basis. They don't actually solve the problem. The only thing that's going to solve the problem is innovation to create a cost savings that would be scalable and beyond just the existence of a certain tax credit or some idiosyncratic program.
What is your special formula then that you're able to bypass the low income tax credit and the subsidized housing? How are you still able to build attainable housing given all of those headwinds that you just talked about?
It's interesting. The tax credit system, not to knock on it too much because we do try to use that when we can, it also creates an interesting incentive where when like a rent control is placed on a city, it benefits all the existing owners, their value of their buildings that are no longer subject to rent control, especially when they typically will put that rent control on new buildings, but not old buildings. That makes those older buildings more valuable. The newer buildings are now much harder to build, and it actually creates a circumstance where you have the exact opposite effect, where the incumbent owners now have an incentive to try to block all possible new construction, and you don't actually get the housing units you're looking for or the affordability you're looking for. So I look at that kind of stuff from a broad lens, and I say, well, if that's a game that we're never going to win in terms of actually delivering an outcome, which is housing people can afford to live in, what's another way we can do it? And so we've done it through innovation. We've done it through investing, most recently into a manufacturing company that is building stackable steel constructed housing units in a factory that we can build those units on a unit by unit basis at a much lower cost, and therefore be into the project at a much lower cost, and therefore deliver a rent that's actually attainable by a working American.
That's an interesting strategy. So you invested in this company. Talk a little bit about that. They're building, the way you described, I'm almost thinking like shipping containers, but is it just metal structures? What do they look like? What kind of cost savings are you achieving through that method?
Yeah, if you saw them, they're beautiful. The company's called Zenni Homes, just so you know what it is. And it is in the dimension of a shipping container, except for the fact that it has a 10-foot ceiling instead of an 8-foot ceiling. It's all a steel constructed box, but it's not actually a shipping container. And so the reason why we do it in that dimension is that means we can actually truck it across the country, because that's an acceptable dimension for trucking, basically. What these units are is they're stackable. So you build them in a factory. And what we've done in this particular company is we've learned from the lessons of the past. There were great companies trying to do manufactured housing out of factories like Katera and others that eventually actually went under. And the reason why was they trying to custom build everything, and do different plans. They just got really big and they were unable to sustain that. We've learned from that and said, well, if you use steel, you'll have a lot less problems on site trying to get these things to fit together. And because it's more precise than wood. And we just design a prototype, kind of like a Tesla. You have the Model S, the Model Y. You design the prototype, and that's all you build. And so we build that prototype. You can have a single unit, which is 320 square feet. You can put 4 of them together and have a 1,280 square foot home. Or you can do what Caliber's doing with them, which is our first development is a 90-unit apartment complex, 6 stories, over 10,000 square feet of grocery store retail. So we have 320 square foot studios and 640 square foot one bedrooms, which is just combining the units together.
What kind of cost savings are you seeing on that type of development and construction versus the traditional way? So
this is a attainable component of it, means it's still pretty nice. And so what this is for a 90-unit apartment complex, we expect to deliver the units at a cost of around $60,000 to $100,000 a unit, depending on a couple of different amenities. And that's for a furnished apartment unit. On average, a Class A apartment unit to build traditional stick construction is about $250,000 to $315,000 a unit to build right now. And so that's the spread. Is there's a huge spread between our cost to complete these units in a factory and our cost to do traditional stick construction. There's site costs, there's a bunch of other things, but at the end of the day, we think we're saving between 20 and 40% of traditional construction costs. And most importantly, we think that we're able to complete this in roughly half the time. So if you want to build a 90 unit apartment complex in half the time that you would normally do in traditional construction, you've got a lot of financing costs, you've got a lot of site costs, you've got a lot of staffing costs, you've got a lot longer time to rent. So when you add all that stuff together, it actually starts to get pretty compelling. And so we can deliver those units, generate a market rate rent that is still market rate, but have the housing actually be attainable for, like I said, working class Americans.
You mentioned the financing piece and the structured financing. What kind of complications do you run into when you go to get construction financing for this type of project? Because it's so different than what most lenders are used to when it comes to construction.
We're still working our way through that. I think that's where the innovation piece comes in, because you got to do a lot of explaining and you got to kiss a lot of frogs. And there's a lot of lenders that we'll spend time with that ultimately will just say, we just can't get our arms around this thing. The interesting component about Zenni Homes business versus others that we've looked at is that they've drafted all of their regulatory approvals at a state level, essentially. And so we find a site, build a podium, which is all city level construction, traditional general contracting, very easy to get through that process. And then they just stack the units on the podium, and anything above the podium is all a state by state approval based on a manufactured housing set of rules that once you've gotten approved at the state, you can actually put this type of housing in any city without having to go through an entirely new process. And so getting lenders that are affordable with the state regulation, getting lenders that understand the state regulations combined with city regulation is the trick to that. And I think most of it's done through community banking, because community banks understand the value of something like this coming into the community. They're willing to, create a precedence for it. And once they do that enough, the big banks will come in and then try to take their business like they always do.
What states are you working within? You're working in some pretty hot markets. What markets are those, and how close is Zenni Homes? So when they ship these units to you, they don't have to drive all the way across the country. So
the Zenni Homes story is fascinating. It was actually R&D was done. Prototypes were ready to be built. They were building in China. And of course, because of COVID, we were about to push the button in February of 2020 to make our first major order, and everything was shut down. So the CEO of the company, who was the former founder of SkyMall, a really interesting guy, ran all over the world looking at where can I build these things that I don't have to deal with this China issue. And went to Mexico, he went all over the country, and he eventually found a coal power plant that had just been shut down by the EPA for pollution in Page, Arizona, which is in northern Arizona. It happened to be located in an opportunity zone. Caliber is one of the largest opportunity zone investors in the country. And so we said, we'll invest in your business. We'll put you guys into production. We'll open a factory in this shut down coal facility, which the Navajo Nation basically gave to the company for $1 a year to put back into production and create jobs. And, we made the investment. And so they're in Page, and from Page, they can ship basically anywhere within a 6 to 8 hour drive fairly easily, which includes Phoenix, Denver, Southern Utah, some really kind of great areas of the country, Las Vegas, et cetera. So our vision for this business is that this is the first production facility. And when it hits capacity, we'll be opening others that are regionally located, where within, a 6 to 8 hour drive, we can hit many major cities across the country.
And the 90 units development that you just talked about, is that still under construction?
We're still in the development phase. We think we'll have full approval to start construction very soon. It's in the third largest city in Arizona, in Mesa, which is their downtown, which also happens to be an opportunity zone that Caliber is involved in transforming. So we're taking an old kind of historic dilapidated building and we're replacing it with this really cool new development.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB & Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com.
I'm wondering if this has been built anywhere where you've actually seen it come to completion and lease up, and what the feedback's been.
The company, like I said, probably would be at that stage by now had it not been for this lovely global pandemic that we all found ourselves going through. Back factories in production, we walked prototypes, we've seen it come together. We're actually shipping prototypes down to Mesa soon so people can walk it themselves. And we've been through, I think, at a high level, the majority of the things necessary to get the first project done. We think that's part of our role as Caliber, is to come in at the early stage, create that innovation, and then serve it out to the community. Right now, the Zenni Home facility that we have can produce at its full capacity probably 3,000 units a year. And the company's sitting on, I think, 60,000 indications of interest in pre-orders. So their sales backlog is beyond anything that they could come through with this first facility. And that's what, scaling and growing the company is going to be important.
What are they building in the factory? Is it just the shell and then it has to be fitted out once it's on site? Or are you getting a full turnkey unit built into the steel?
That's the secret sauce for this business, is it's a full turnkey unit and you have optionality. We're actually doing full turnkey units with movable, essentially automated or robotic furniture. So the bed actually lifts into the ceiling at night during the day, and that becomes your living room. And then it comes back down at night and that becomes your bedroom. The closets sort of pop out. You can get dressed for the day and then they pop back into the wall. So you get that space back for the rest of the day. So we're going for a higher end unit and a higher end feel, but we think that solves the need of how do you make something more attainable? Well, you can create a Class A multifamily experience. It's just got to be a smaller unit, and you've got to do some of these innovative things to accommodate that. But by getting smaller, you're still getting $250, $3 a square foot for rent, but it's the total monthly cost is still something that someone could actually afford.
And that higher rent per square foot is important. From a profit standpoint and an investment standpoint, you're still going to make money. And it's a win-win all the way around because it's still an attainable unit for the end user, but you're actually making more money on it because you're making a higher profit per square foot.
That's where that housing as a service concept comes in, is that as you innovate and as you add in this technology and all these different components, at some point in time, the person coming into that unit goes, this is a lot for me to manage. What if my bed breaks? What if this happens? I've got all this technology I've got to manage now. And so we said, well, why don't we just come back with a single check for everything? We warranty everything. And it's sort of a simple service where all I have to know is I call Zenni Home and it gets done, whatever that it is. And so the Zenni Home management team is building out the infrastructure internally through a combination of partnerships with third parties and technology to make it so that the users of these buildings can just, like I said, make one phone call and get any of their needs taken care of between maintenance, between breakdowns, between other issues that might cause them to pause at wanting to move into one of these units.
I'm glad you mentioned housing as a service, HAAS model. Is that what it is basically? Is you're not, as the resident paying rent, you're not really responsible for anything inside of the unit as well?
Yeah, it's sort of, other than your personal belongings, of course, we can't deal with that, but that's exactly the concept. And a lot of the way the world works today, whether it's through, shorter leases, corporate housing, people wanting to live half their life in Phoenix and their other half of their life in Chicago or whatever it is, flexibility has become really attractive. And in exchange for flexibility, the tenant themselves is actually willing to write a check for a larger amount that encompasses everything. We've seen that with lifestyle apartments where your gym membership is essentially included in the apartment and that kind of stuff. I think we're just taking that to a whole other level. And we hope at some point in time, there will be Zenni home developments all over the country where someone could kind of pop from city to city and not have an issue with, the being able to move and be able to live their life the way they want to live it.
How far does that housing as a service extend? Is this kind of like a hotel or vacation rental type experience where you move in and there's a mattress on the bed, dishes in the cupboard, sheets, towels, blankets, everything you need? Or does the residents still need to bring something with them?
Yeah, I think right now we've got the lights off and we're still feeling our way through the dark to try to figure that out. I think that's going to be a lot of, sort of MVP style technology testing where we're saying, do you want this? Do you not want this? Do you like this? Can we charge you for that? How's that going to work? We're still working our way through it. But conceptually, we envision the fact that, at the end of the day, someone just wants to write a check and have everything be done. What is everything? Not sure yet. We're going to work our way through that.
There's a couple other terms and strategies mentioned in the intro here. One is land leases. And I'm wondering how that fits into everything we've just talked about, because that is one of the strategies that you use.
So we're doing a different style of development called with a partner called American Resort Communities, ARC, where we actually might put some of these Zenni home units on site. But what we've done there is we've come in as building out a master plan community, and the community size and scale is similar to like your typical single family home master plan, but the lot sizes, the infrastructure is all designed to accommodate smaller units, affordable manufactured units, like what I'm talking about, as well as, more transient housing types like, fifth wheels and RVs and, people who kind of come and go from a community. And what we see as a vision is that people still want the benefit of a high-end lifestyle experience, but they want to do that in a way that they can afford into retirement, especially when it comes to the baby boomer generation coming into retirement and trying to find a way to live off of a fixed income. And so I said, well, we can design that. We can create communities that have a theme. Each American Resort Communities project has a theme. One is called the Boardwalk, another one is, we've got the Neon Ranch that is really cool. And each one of them has an interesting and different theme about the community. We've got one we're doing up in Prescott, Arizona, that's like the observatory. It's all about stargazing stuff. And so everything's centered around community amenity, different types of, community-based living. But in order to make it all hang together, Caliber has to buy the land, build all the infrastructure, and then basically lease the lots on a long-term basis and use a leasing strategy rather than having a lot of individual ownership in the community. The individual ownership is at the housing unit level. They own their property, but we're doing land leases underneath so that we can manage from a global perspective the entire project in that way. Going back to my structured finance comment, what that does is it creates a master plan community with a beautiful, disaggregated, long-term lease payment structure that's very similar to your triple net, Class A credit tenant type deal. And so the finance guys love that because that type of financing and structure is really attractive. And for the user, it's, hey, I can live in this beautiful community. I don't have to write a check for the land. I could actually move my housing unit from here to another place in the future if I wanted to. And this is how you can create that way of living. So it's been a really interesting, again, innovative way to solve the problem, which is how do you create an affordable, attainable housing experience for a generation of people who are going to need it that still feels good, high end, has, a community-based approach.
The way we've been thinking about housing and building apartments, it really seems very old-fashioned compared to a lot of things you've just discussed. How should we be looking toward the future when it comes to building attainable housing? You've kind of laid the groundwork, but what's the bigger picture here?
How we've invested in the last decade or longer is not how we can invest in the next couple decades because of this turnover that we've all seen. Interest rates going up, the economy slowing down. It's inevitable that these things are going to happen. And if you don't have a strategy to build something that creates a rent payment that's attractive at a lower cost in a more efficient way on a go-forward basis, you're going to basically invest your way into poverty. And that's not a great thing for investors. We need to think past that kind of stuff, because when we had zero interest rate environment, when we had a relatively humming economy, and when we had a situation where, there was a general belief that real estate was going to continue to go up into the moon, you could invest in a sloppy manner at a high cost and still somebody else was willing to buy that thing and bail you out. That's gone. And if you can't find a way to invest at a lower cost, delivering the supply that the demand still needs, you're basically going to be caught on the sidelines for the next 2 to 5 years while this issue works its way through the system, which is what we found in 2008 when we started our company. Was there was a lot of brilliant real estate investors and real estate related developers who basically did nothing from 2008 to 2013 because they couldn't find a way to make money in that type of an environment. And so there is a way to do it. It's still fulfilling the demand that's persistent and consistent out there for housing, but doing it in a way that you're delivering those units at a lower cost and therefore a lower rent, which is what people are going to desperately need, because it's unsustainable to say that the average American family that makes $90,000 a year combined income can have a $10,000 a year increase in their cost and sustain that. That's not going to happen.
When it comes to your life and your business, what's your favorite hack or your favorite app?
I really believe that there's a lot of ways to succeed in business, and there's only one way to fail. So the one way to fail, which is probably what most people want to know, because I could go on for 3 hours on how to succeed, is to stop. And it's to stop whatever it is that you're doing. As long as you continue and you iterate and you find a path forward, you will find success. You'll find whatever success means for you and whatever it is that you're trying to accomplish. And so when I do talks to entrepreneurs, or when I try to help people grow their business, you find every business person hits a moment in time where it's just like, it didn't work. It's not going to work. I have to throw in the towel. Otherwise, I'm a lunatic. And the answer to that question is that's when you're like 2 inches away from success. Because if you can find a way forward, that way forward is probably the way you should have been working for the last 2 years. And so, don't stop. If you've got an idea, keep working it. You'll find that way forward.
How would people find out more about you, your company, Caliber, or get a hold of you?
I'm at caliberco.com. It's CALIBERCO.com. Easy to find. It's Chris at caliberco.com. And then, if you're interested in the Zenni Home project, it's Zenni Homes, ZENNIHOME.com. And then American Resort Communities is the other piece of it that you can just Google and you'll find those guys. And so really easy to find Caliber. If you're interested in investing, we'd love to have you. If you've got projects that you think we should look at, great. If you're an opportunity zone participant, so are we. Love to connect.
Chris, thanks for coming on the show and talking about these strategies and ways to create attainable housing. The things you're doing are really fascinating, and I've really enjoyed our conversation. Thank you so much.
Thanks, Brian. Thanks for having me.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.